Above, we talked about the formula on comprehensive income. This formula only tells us how to calculate the final tax payable for comprehensive income. But in tax practice, the collection of comprehensive income tax is a step-by-step process. The process is divided in two steps. The first step, provisional withholding, and the second step, annual assessment. On the provisional withholding step, where a withholding agent pays these four types of incomes to a tax resident, it should withhold IIT and complete IIT filing as agent. And on the second step, the tax resident should perform annual assessment of comprehensive income at the end of the year. And in some cases, the tax resident should also perform annual IIT filing on his or her own between the 1st of March to the 31st of June of the next year. On the first step, the methods of provisional withholding for different income are different. Now we'll come to them one by one. The first step, provisional withholding. Firstly, we talk about the provisional withholding on wages and salaries. Where an employer pays wages or salary to a China tax resident, the first step, the employer should withhold IIT by the cumulative provisional withholding method and complete IIT filing as agent. The formula for the cumulative provisional withholding method as follows. Provisional withholding tax payable for the current month equals to cumulative provisional withholding taxable employment income times provisional withholding tax rate minus quick deduction factor and continue to minus cumulative provisional tax withheld. What is calculated in parentheses is how much tax should be withheld for the accumulated salary and wages up to the current month and count after the parentheses. Continue to subtract the accumulated withheld tax up to the current month. In the last formulate, cumulative provisional withholding taxable employment income equals to cumulative employment income minus cumulative personal standard deduction minus cumulative specific deductions and continue to minus cumulative specific additional deductions. And cumulative personal standard deduction is calculated by multiplying RMB 5,000 by the number of months from the first month to the current month in the current tax year during which the employee is employed by the employer. Here, provisional withholding tax rates is shown on tax rate table for comprehensive income on annual basis. Where let's experience how to use formulate to withheld provisional through an example. In this example, Mr. Wang, a tax resident, has monthly salary RMB 10,000. Social insurance and housing fund contribution are RMB 1,500. And housing loan interest specific additional tax deduction in 2022. Required. Calculate the withholding IIT of Ms. Wang in January, February, and December 2022. Look at the answer. Ms. Wang in January 2022. The calculating process of provisional withholding tax payable is as follows. The first item, cumulative income. 1 month, so only 10,000. Less cumulative personal standard deduction. 1 month, so only 5,000. Less cumulative specific deductions is social insurance and housing fund contribution. 1 month, so only 1,500. Continuing less cumulative specific additional deduction is housing loan interest. Only 1 month, so the amount is 1,000. So, cumulative provisional withholding taxable income equals to 10,000 minus 5,000 minus 1,500 minus 1,000. The amount is 2,500. By referencing the tax rate table, we got the applicable tax rate is 3%. Quick deduction factor is 0. So, provisional withholding tax payable equals to 2,500 times 3% minus 0 is 75. Now, we are coming to February. Missed one in February 2022, the calculating process of provisional withholding tax payable is as follows. The first one, cumulative income. Up to February is 2 months, so the amount is 20,000. Less cumulative personal standard deduction. 2 months, so the amount is 10,000. Less cumulative specific deductions is social insurance and housing fund contribution. 2 months, so the amount is 3,000. Continued less cumulative specific additional deductions is housing loan interest 2 months, so the amount is 2,000. So, cumulative provisional withholding taxable income equals to 20,000 minus 10,000 minus 3,000, continued minus 2,000, the amount is 5,000. By referencing the tax rate table, we got the applicable tax rate is 3%. Quick deduction factor is 0. So, provisional withholding tax payable equals to 5,000 times 3% minus 0 is 150. Cumulative provisional tax withheld is a tax that has already been withheld in January. We know that it's 75. So, provisional withholding tax payable equals to 150 minus 75 is also 75. Now we have calculated the individual income tax that Mr. Wang should withhold and prepay on his salary in January and February. We've noticed that for each month, it is calculated based on the cumulative. The calculation method from March to November is the same. So finally, let's come into December. Missed one in December 2022. The calculating process of provisional withholding tax payable is as follows. The first item, cumulative income, is 12 months. So the amount is 120,000. Less cumulative standard deduction, 12 months. So the amount is 60,000. Less cumulative specific deductions is social insurance and housing fund contribution, also 12 months. So the amount is 18,000. Continuing less cumulative specific additional deductions is housing loan interest, 12 months. So the amount is 12,000. So cumulative provisional withholding taxable income equals to 120,000 minus 60,000 minus 18,000, contingent minus 12,000, the amount is 60,000. By referencing the tax rate table, we know that applicable tax rate is 3%. Quick deduction factor is 0. So, provisional withholding tax payable equals to 30,000 times 3% minus 0 is 900. Cumulative provisional tax withheld. It is amount already withheld from January to November and 75 per month. So, 75 times 11, the amount is 825. So, provisional withholding tax payable equals to 900 minus 825. The final result is 75. At this point, we finish the process of provisional withholding on Ms. Wang's wages. Now we talk about the provisional withholding on services income. Here the formulate. Provisional withholding tax payable equals to taxable services income at one time less 20% deduction times withholding and prepayment tax rate for services income of tax resident and minus quick deduction factor. Generally, on services income, provisional withholding tax can only be calculated on one-time basis and cannot accumulate the previous services incomes and all kinds of allowances and deductions. However, for three types of resident taxpayers who continuously receive remuneration of personal services every month, they can make these deductions on month basis. What are these three types of people? We won't talk about it further in this lecture. Here the withholding and prepayment tax rate table for services income of tax resident. We've known that it's a three-level progressive tax rate table. Three-level progressive tax rate table. We've talked about it in Chapter 3. Now, we have an example about provisional withholding on services income. In this example, Senior Maisley earns RMB 40,000 from performance in February 2022. The income doesn't deduct individual income tax. Please calculate the payable individual income tax that should be withheld and prepaid. We've known that remuneration from performance belongs to service income, so we directly apply the above formula. Provisional withholding tax payable equals to taxable services income times provisional withholding tax rate minus quick deduction factor. Here, the full amount of income is 40,000 less 20% deduction. The result is 34,000. Let's reference to the tax rate table. The applicable level is the second, over 20,000 to 50,000. So the applicable tax rate is 30%. Quick deduction factor is 2,000. So here times 30% minus 2,000. The result is 7,600. Now we come to provisional withholding on manuscript income. Here the formulate. Provisional withholding tax payable equals to taxable manuscript income less 20% deduction and then less 30% deduction times the applicable tax rate 20%. In the formula, the first 20% is a deduction and the second 20% is applicable tax rate. The same as services income, provisional withholding tax payable is calculated on one-time basis and cannot be accumulated. Take a look at the example. In this example, a writer is a tax resident who obtained a remuneration of RMB 20,000 without deducting individual income tax in March 2013. Please calculate the amount of individual income tax that should be withheld and prepaid. Obviously, the remuneration of RMB 20,000 belongs to manuscript income, so we directly apply the above formula. Provisional withholding tax payable equals to RMB 20,000 less 20% deduction less 30% deduction times the applicable tax rate 20%. The result is RMB 2,240. Let's come to the provisional withholding on royalty income. Here the formulate. Provisional withholding tax payable on royalty income equals to taxable royalty income less 20% deduction times 20%. In this formula, the first 20% is a deduction, and the second 20% is applicable tax rate. We can see that the same as service income and manuscript income, provisional withholding tax payable on royalty income is also calculated on one-time basis and cannot be accumulated. The formula is very simple. Just substitute the relevant data directly, so we won't discuss it further. Now let's compare the methods of provisional withholding on four types of income from the perspectives of provisional withholding tax rates and whether they are accumulated. First, compare from the perspective of provisional withholding tax rate. For wages and salaries, its provisional withholding tax rate is shown on tax rate table for comprehensive income on annual basis. And for services income, its provisional withholding tax rate is shown on withholding and prepayment tax rate table for services income of tax resident. Both manuscript income and royalty income, their provisional withholding tax rates are 20%. Then compare from the perspective of cumulative or not. For wages and salaries, a cumulative provisional withhold on month basis, and the others provisional withhold on one-off basis. No need to accumulate. So far, we finished the first step of comprehensive income system, provisional withholding.